My name is Anthony Kazazis. I am the director of the NYC Network Group as well as the NYC Real Estate Expo. And once again, I'd like to thank everybody for registering for Eileen Mazza's webinar with RCN, Expand Your Financing Options in 2022. The products you need in your arsenal if you plan on investing in real estate this year. Even with interest rates rising and the refinance boom over, there are plenty of lucrative ways to invest in real estate in 2022. Now is the time to explore other financing options and add different commercial loan products to your offerings. Today, we have RCN's Capital Loan Officer, Eileen Mazza, who will talk about the niche products for multifamily, fix and flip, short-term vacation rentals, and more. Eileen consults with new and seasoned investors alike, providing the information that they need to make smart investment decisions. New investors need a lot of guidance, and Eileen is an expert hand holder through the lending process. She started in real estate lending industry in 2003 and with RCN's Capital since 2015. She's also been in the real estate sales broker since 2008 and holds a license in both Connecticut and North Carolina. Eileen is a very active in her local RIA, that's Real Estate Investors Association, and the online Invest Her community, which focuses on supporting women in real estate investors. She believes in making connections that turn into long-term business relationships. Our sponsor today is her company, RCN Capital LLC. RCN Capital LLC was established in 2010 to provide time-sensitive bridge financing to real estate investors to fund the purchase of non-owner occupied residential and commercial properties, provide bridge loans, and provide the real estate backed lines of credit. Formed towards the end of the recession, RCN Capital has benefited from the turbulent housing market in which many real estate investors see great opportunity. A lack of liquidity in the credit markets and increase in regulations and banking industry has restricted conventional financing as an option for investors in the fast-moving and competitive real estate markets. As the nation's premier direct private lender, RCN Capital helps fill this void. As a direct private lender, RCN takes the common sense approach to underwriting with all approvals made in-house. RCN has dedicated to providing quick responses to time-sensitive loans, oftentimes with the ability to close in as few as 10 days or so. At RCN Capital, we value referrals and our brokers are protected. RCN is committed to the highest level of customer service because our success lies in building relationships. Okay, so ladies and gentlemen, I would love to have you guys, when you have questions, please type them up and put them into the Q&A. I'm going to do my best. If you want to also appear live, I'm going to open it up live for you as well, so you can have a little dialogue with Eileen. So again, type in your questions and then parentheses, type in live if you want to appear live, and then I'll open you up so you can speak and have a little conversation with Eileen as well. Okay. And of course, if you have any questions, you can continue asking questions with Eileen forever. We hope you would like to work with Eileen and RCN on these type of deals. So without further ado, ladies and gentlemen, I am going to hand it over to Eileen Mazza. She is going to open up her presentation now.
Thank you so much, Anthony, for that great introduction. We are so happy to be part of the New York City Real Estate Expo. And I just wanted to thank all of you for registering today and taking the time to learn a little bit more about our company and what we do. We are so thrilled to be here, and I want to answer all your questions. So I made a more brief presentation so that we could get right to your questions. If you have any deals that you want to go over, definitely do that. And at the end will be my contact information. So you will see how to reach out to me so that we can work together, or if you have any loan scenarios, anything of that nature, I'm happy to answer all your questions. That's what I'm here for. So my name is Eileen Mazza, and I want to tell you a little bit more about RCN Capital. We are a national company. We are across the country. There's just a few states that we don't lend in, which I'll get to that later. But we have been lending since about 2010, and we are a leader in the industry. We have a sense of urgency to get your deals closed. We have a high level of professionalism to get your deals closed. And we work with fix and flip loans. We do acquisition as well as cash out refinance. We work with a lot of real estate investors that do the BRRRR strategy. They buy the property, they renovate it, they get a renter in there and do a refinance and then repeat the process. We work with Airbnb. So those particular investors that are buying properties to Airbnb or doing cash out on that. We work with all sorts of investors, but just keep in mind that we are a non-owner occupied residential lender. We have access to multiple sources of capital. We have funded over 8,000 transactions, and we use common sense underwriting. We have an in-house underwriting team, and we are a team. We act like a team, and we work together to try to figure out the best possible way to get your deals closed. We look for ways to be flexible, unlike other lenders that can be kind of hardcore, hard and fast. And basically what we're trying to do is work with you so that we can go ahead and keep funding your transactions, because our end goal is not to work with you on one transaction, but to get your business over the long term and develop a long-term relationship with you and develop a trust, because that's what we're hoping for. So we do have flexibility, as I said, in our underwriting. Our total origination thus far is over $3 billion. Every month we're funding hundreds of loans. So we definitely have a sense of urgency, and we have a short timeline, a short window to get those deals closed. A little bit more about us. We do non-owner occupied, as I mentioned, residential and commercial property backed loans. So when I say commercial, we're not talking about like strip mall or office buildings. What we're looking at is 1 to 4 family non-owner occupied properties, as well as 5 to 20 unit apartment buildings and some mixed use, which I'll get into a little bit later. We do common sense underwriting. It's done in-house, as I said. We're a team, we work together. Generally, people ask, how long is my loan going to be in underwriting? It's typically 3 business days. We're not subject to conventional mortgage lending laws or regulations, so we don't have the same tight requirements that other lenders do, which is nice because we are able to be flexible to close your deals, and we're able to fund more deals, of course. Focusing on the real estate asset and loan to value, less on the borrower's credit and income. So we're going to be lending to the business entity, and the borrower is going to be the primary guarantor. So we need documents like entity documents and that sort of thing. But we are going to be focusing on the asset. We do require an appraisal on every property, and that's important to know because that affects the timeline a bit. So one-stop shopping. So we have investors that want to buy a property in Florida, and then they want to buy a property in New York, and then they went on vacation in Colorado, and they want to buy a vacation home in Colorado to use as an Airbnb. We can do all of that. We lend all across the nation. Everything that you see in green is where we lend. Where we're not lending is Alaska, Nevada, Minnesota, Vermont, and North and South Dakota. Everything else is fair game. So you can bring your deals from all over the country. So we do short-term fix and flip. So this is our 12-month loan. We can do acquisition only, or we can do acquisition and rehab. So we'll do 1 to 4 family structures, condos, both conforming and non-conforming. With non-conforming, generally, there's going to be at least a 10% reduction in LTV. We'll do townhomes and 5+ unit properties. So we'll lend up to 90% LTV on properties that are 1 to 4 family structures only. And our rates range from about 7.35 and up. Once again, this is for our short-term loan, and this is an interest-only loan. 12 months. We do have some extensions available. It's on a case-by-case basis, of course, with good payment history. And there is no prepayment penalty. So for example, if your client or yourself is sending in a deal and you want to put like $25,000 into it. So let's say you're purchasing it for 100, you want to put $25,000 into it. The renovation is going to take you 60 to 90 days. And then at that point, your intention is really not to flip it, but to hold it and get a tenant in there and then do a cash out refinance. We can do that too. So we don't have a set seasoning requirement on those type of loans that we do acquisition and rehab. So let's say you finish the project in 3 months, or your client, and they want to get a tenant in there and so forth. We can do the cash out refinance at that time once they acquire a tenant and show us a lease agreement and so forth. So that's really flexible, unlike a lot of lenders that require 6-month seasoning before they will do a cash out refinance. So some highlights of our short-term lending program is we will always do 100% of the rehab costs funded. You don't need experience to qualify. I work with newbies all the time, so that's never an issue. And we also don't require them to have a primary residence to start. Even if they lived in an apartment, there are some lenders that will require them to have a primary residence before we'll do an investment property. Each of our investors needs to just sign an affidavit stating that they're not going to occupy the subject property that we're lending on. Our minimum FICO score is a 620 for this fix and flip program. The rates and leverages can improve with experience and good credit. So the more experience that an investor has, the better the terms. So let's say that a newbie or a new investor is going to get 80% of purchase plus, or 82.5% of purchase plus 100% of run out. A seasoned investor, or somebody that we consider with 3+ for experience in the past 3 years, will get up to 90% of purchase plus 100% of run out. So we reward you for your experience. We do single family residences, multifamily loans can apply. And by multi, we're talking about 5+. We do 1 to 4 family as well. Our minimum loan amount is $50,000. Our minimum purchase price, important to know, is at least $45,000. And in metro areas, we're going to have different requirements. So let's say Baltimore, Chicago, even Orlando. Just keep in mind that the deal needs to be run by me to make sure that it makes sense. We always want to check on that first, but we do have higher minimums in metro areas. And we do work with a website called House Hacker, and that can help a lot of people help generate their rehab list, because it will show them what the typical rates or prices are for certain types of work in a specific area. Like I live in the Raleigh, North Carolina metro. And if I punch in the zip code of the property that I'm purchasing in this area, it will give me what the prices should be in this area, which will help me compile my rehab list very easily. And I can easily save it to a PDF and forward it to me when that comes about, when I'm doing a specific loan. And it's much easier for your loan officer because they can see the work and line items that you plan to do. So I can better have an assessment and, effectively check out the property and see how it will work for our programs and give you the best terms. So we also do long-term rental loans, and this is our 30-year loan. And we have some options here. We do 1 to 4 family structures. That's our most common. Condos, both conforming and non-conforming, also with a reduction in LTV for non-conforming. Townhomes, and 5+ unit properties. With 5+ unit properties, it's a little bit of a different animal. We need a little bit more information, like gross annual rents, property management expenses, and so forth. We'll lend up to 80% of purchase. So that's our max LTV for the long-term loan. So with the short-term, as I mentioned, with experienced clients, you can go up to 90% of purchase. With the long-term loan, our max is 80% of purchase. And we have rates starting in the 6s. We do interest-only short-term loans. We do fully amortized 30-year loans. 5+ unit are hybrid ARMs. So we have 5, 7, and 10-year ARMs. And we have interest-only options for those 5+ unit properties. We do require a prepayment penalty adjustable up to 5 years. That has a sliding scale because I have had some people choose a no prepayment penalty option, but just know that your rate will increase to reflect that. So we can do a 5-year down to a no prepayment penalty. The lowest rate will be with the 5-year prepay. The highest rate will be with no prepay. So it's in your best interest, if you plan to hold the property for at least 5 years, to do the 5-year prepay. So some highlights of the long-term rental loan is you don't need experience to qualify. It's important to note that if you don't have experience, that you have to, just have some property management experience. If you don't, we do require you to hire a property manager. We do have rates that start in the 6s as well. Our minimum FICO score for our long-term loan is 640. Or if you're looking at a 5+ unit property, it's 680. Our FICO buckets are in place to ensure better LTV leverages. Our appraised as-is value must be at least $75,000. And our cash flowing properties improve rates and leverages. It's important that for any rent-ready property, if you're doing a purchase and it's not currently rented, we require to see a lease within 90 days. If it's a cash out, we do need to see a lease. If it's an Airbnb, that's a different animal, and we can discuss that as far as rents go and a full history of rents if it's been a successful Airbnb in the past. We allow for passive income as soon as the tenants are in place. So we're flexible as far as, tenants are concerned when you're purchasing it. Like I said, we give you up to 90 days to get a tenant in there. If there are any issues, important to let us know right away. So that is a little bit about RCN. As I said, it was a shortened conversations just so that we can jump right into the Q&A. If you have any questions, you can feel free to email me at emazza@rcncapital.com. And my phone number should be listed, but 860-432-4894. And I would love to jump into your questions and answers. I'd love to answer all the questions. So let's go ahead and do that, Anthony.
Okay, thank you, Eileen. We have a lot of questions that were typed. You had over, there was like 120 people that were registered, and we have a lot of the questions here. So let's start off with, how does the BRRRR method work?
Mm-hmm. Okay, so let's say you're going to purchase a property to renovate. You have a property that needs rehab, whether it be a lot of rehab or just general touch-ups. What you're going to do is use RCN. First thing we're going to do is a fix and flip loan. So a 12-month loan, but you're not required to hold the property for 12 months. As I mentioned earlier, you can get out at any time once the renovation is completed, and then you are going to go ahead and get a tenant in place. So the first step is acquiring the property. So buy, that's the beginning of BRRRR. And then you're going to renovate it. So you're going to do the fix and flip loan. Part of that is acquisition and rehab. The next step is to get a renter in there. So rent, and you're going to find a tenant to occupy the space. And the next step is refinance. So once you secure the tenant, you're going to send us that information. We're going to order the appraisal. We need a new valuation. So when we did the fix and flip, they're doing an as-is and an ARV valuation. As is, not going to be as high. With the after repair value, it's going to be higher. But once you have the tenant in there, the value should be a little bit more because it's a secured property. So at that point, you're going to do the cash out refinance loan with us. So it's a 2-step. First, the fix and flip loan. Secondly is the cash out refinance loan. And then you're going to take out that cash out and then repeat the process. That's the last step of the BRRRR strategy, is repeat. So let me just talk a little bit until I see another question pop up in the chat. So you said, yes, it must be. Yes, it must be held in the name of a business entity. We do require that, whether that be an LLC, LLP, or corporation. We lend to all of them. So yes, that's the case. And like I said, we lend to newbies, we lend to seasoned investors. We also do portfolio loans, which I also didn't mention. Our minimum amount of properties in a portfolio is 2. So if you want to do a property acquisition of several properties or a cash out, we can do that as well. Okay, the next question is, how much down payment is required for a commercial property? So by commercial property, we consider ourselves a commercial lender because we lend in the name of a business entity. So typically for a new investor, it's between 20% down, typically for a 30-year loan. For a fix and flip loan, it could be anywhere from 10% down for a seasoned investor with at least 3 for experience, all the way to maybe like, 18 or 20% down. Just really depends on the borrower's level of experience, their credit score, and experience, credit score, and the property location, because we're always going to check that out. Something important to note is I always look at the location of the property because, we're trying to mitigate risk. So we don't do rural properties. So we lend to urban and suburban areas. So that's important to know. Does anyone have another question that I can answer in the chat, please? That's what I'm here for. In the meantime, while we're waiting, do you do delayed financing? That's a great question too. So yes, what we do is we call a delayed purchase. Let's say you were able to acquire the property at the courthouse steps and you paid cash. Let's say you paid $150,000 for the property. So if you bring it to us and show us the purchase HUD or the sheriff's sale, whatever documentation that you might have to show that you did acquire the property and you wanted to renovate it, we can do that. We call it a delayed purchase. So we'll lend the same as your purchase price. So if you purchased it for $100,000, we'll lend against the $100,000. So if you're a new investor, let's say we'll lend $80,000 or 80% of purchase plus 100% of reno. Let's say you want to put $50,000 into the property. So we'll be lending the purchase acquisition costs plus the renovation costs to do a flip loan. But yes, we do delayed purchase. We also do that for the 30-year loan. So that's a great question. And I like for you to send me all that information with a delayed purchase if you just got it from a sheriff's sale or an auction or whatever, within 30 days of your acquiring the property, just so that we can get an appraisal ordered and get that funded. So we need to close within like 60 days of when you acquire the property. Okay, my contact information again, my phone number is 860-432-4894. I'm going to put it in the chat. So the next question is, are you in Connecticut? Yes, our home base is in Connecticut. We have over 100 employees. So most of them are located in Connecticut. However, I'm originally from there and I lived there over 40 years and I decided I wanted to change. So I moved to Raleigh, North Carolina. And we do have several employees that are all across the country. We do have a Charlotte, North Carolina office. We have people in Houston, California, Chicago, so pretty much all over the country. Just curious because of your number. Yes, I also have a North Carolina number, but I mostly give out the Connecticut one. Both numbers ring to the same phone. Do we do mobile home parks? Great question. We don't do mobile home parks. We don't do mobile homes or modular homes. We do stick-built construction. So important to note. That kind of goes hand in hand with rural. Although I'm in North Carolina and there's more mobile homes here and they're in suburban areas, even some urban areas, but no, we don't lend to mobile homes. So thank you for asking that. Let's see. So yes, so I am from Glastonbury, Connecticut. So you said you used to live in East Lyme. So it's nice to have you here. Welcome. Anyone else have another question for me? Let me talk a minute about investor experience while I'm waiting for another question. Investor experience is what we consider to be is how many fix and flips that you've completed in the past 3 years. So if they've completed, they have 2 rentals that they've owned for the past 20 years, of course, we're going to count that. That counts. how many fix and flips they've completed, or how many rental properties they have held in the past 3 years, even if they have sold it. So let's say they sold it 2.5 years ago, we still are going to count that. We also count if someone has a general contractor's license or a real estate broker's license. We'll only count one or the other. We're not going to count if they're a general contractor and a broker. So you have to choose one, and we'll ask for a copy of that active license. So does anyone else have a question? Let's see. I don't see your info. Okay, well, I'll just say it again. E Mazza, that's E M as in Mary, A Z Z A. So E Mazza at rcncapital.com. E Mazza at rcncapital.com. And my number is 860-432-4894. Yep. So I see. Okay. Post to everyone. Okay. Let's see. So I think I talked about, for a long-term requirement, that you're not required to own your own primary residence before either diving in as a real estate investor for fix and flip or for 30-year loans. So you'll have to just sign that affidavit, or your client will. We work with both direct borrowers and brokers. Brokers bring a good amount of our deals every month, but lots of people see us on Google. They look at Trustpilot reviews, which if you look at Trustpilot, you could see a lot of the reviews mention me, which I'm super thankful for when my clients take a moment to write something positive about working with me and my sense of urgency and professionalism, because that's really important. You want to look into the person that you're working with, because not all lenders are created equal, and RCN has a high level of professionalism and sense of urgency. So it's really important. We want to get your deals closed, and we want to work with you in the best possible way. So not only will you work with us again, because of course that's the goal, we want to keep working with you as you purchase and cash out and sell different properties, but we want your referrals as well, because that's our bread and butter. And we want your trust. We want to earn your trust. We could talk a little bit about minimum purchase prices and maximum values that we do. So I think I mentioned before, our minimum purchase price is $45,000 plus renovation, and our minimum value of the property needs to be at least 50. But for our, let's see, both fix and flip and 30-year, our maximum value is about $3 million. And I just recently had a property, it was a beachfront, huge property in North Carolina, right on the shore, and it was like $6 million. We couldn't do that one, much to my chagrin. I would have loved to do that one. It was gorgeous, amazing. But think of our minimums, maximums. Let's see. Oh, I see a question. Can the property be mixed use? Great question. So yes, we also lend to mixed use properties, but here are some parameters. The minimum value for the mixed use property needs to be at least $350,000. No exceptions there. We need the value to be at least $350,000. And we need the square footage of the property to be at least 51% residential. So if you take the total of the square footage between the commercial space and the residential space, whether like apartments, and you're going to want to make sure that that calculation is at least 51% residential square footage. And then it's something we could look at. We require an environmental test for any type of property that's 5+ or mixed use. And that's about $150 just to do a desktop review to make sure that that property is low risk environmental. And a mixed use property or 5+ requires a special type of appraisal, which is by an MAI certified appraiser, which generally costs more than a normal 1 to 4 family appraisal. How could we get the guidelines? We don't give out our guidelines, but I'd be happy to send you marketing materials that kind of give you the general information. And I would be happy to send that out to you. If you email me directly, I'll be reaching out to all of you within the next few days. So I can send you that information directly. We have marketing slicks on the Airbnb, fix and flip program, 30-year program, 5+. Everything that we do, we have a marketing slick for, and I can send that your way. So let me talk a minute about Airbnb, because maybe one of you wants to do that, right? So if you're purchasing a property to Airbnb, and let's say the property is vacant, if this is something that you're purchasing, or it's owner occupied, it doesn't matter. But the point is, your intention is to make it an Airbnb. Let's say it's a single family home, close to the beach, a few miles from the beach, but you think it'll have great income. We're going to close that loan, as an acquisition, as a purchase. And because we don't have a tenant in there, we're going to use the market rent. So when I order an appraisal, I'm going to order a 1004, which is a normal appraisal for a single family home, a 1007, which is a market rent addendum, tax cert, flood cert. And so we're going to use what the appraiser calculates is what would be the market rent. They're going to calculate it on an annual basis, meaning it's not going to be the kind of money that you can get from an Airbnb, but it will be on a monthly, like let's say if you had an annual lease with someone there. But if you have a successful Airbnb that's been running for at least 12 months and you want to do a cash out refinance, clearly no one lives there. It's an Airbnb. It's an investment property that you're renting out either weekly, monthly, or by the day. We are going to ask for your rental history directly from the website, whether that be VRBO or Airbnb. And we're going to ask that you print out that summary of exactly what kind of income that produced in the last 12 months. So that's very helpful for us to use for determining the cash out refinance and what we can offer. And we're going to go by as is value. So when we do a cash out refinance, we're going to go by the as is value. So let's say you're purchasing a property and you're purchasing it for 100,000, but it appraises at 80. We're going to go by the lesser of the two. So we're going to lend against the 80, not the 100. So important to note. Oh, let me just chat about, just some things that I'm working on now. So we can lend to an investor multiple times at once. So let's say that I have a specific client who's doing an acquisition of one property. So they're purchasing one investment property and they're doing a cash out refinance on another property. And they're doing another property to fix and flip. So we can do several deals at once. The most I've done is 7 deals for one person in 1 month. So whether that be fix and flip, cash out refinance, we're not limiting you. You're limited by the number of properties you can do to see if you have the cash to close, because we do require your down payment, your closing costs, and reserves. So your reserves, let's say for a fix and flip, you need 6 months worth of interest payments. And remember, the 12-month is an interest-only loan, and about 10% of your rehab budget. Plus, I like to ask for, about 5,000 more, because we want to see your living costs in your bank account too. We don't want you to be, we want you to have all the funds that you need in order to live, as well as buy the investment property. Because we don't want to see you default on your loan. That's not our goal. We are not loan sharks. We don't want to see you default on the loan, and we'll do whatever we can to try to keep you on task and on time. Because unlike how some people think of hard money lenders as loan sharks, we are not that way. That's not our motto, and we want to do whatever we can to help you. So important to let us know if there is any change in your financial situation so that we can try to work with you as best we can. We do have a full servicing team that we use. We have a legal team of closers as well. So we are all inclusive. Okay, what was that website you mentioned? Yes, House Hackers. I think it's househacker.net. I'm not on my, I don't want to close out of this to find it, but I can certainly email it to you when I reach out. If you just want to put your name, let's see, Paul McKay. Okay, I just wanted to take a moment to thank you all for coming today. And I hope you found it a little bit educational. You took time out of your day to attend and learn a little bit more about RCN and take the time to put in a question. And I just appreciate it so much. That's what we're here for. We're here to help. We're here to guide you. I work with newbies all the time, so I really am an expert hand holder through the process. You can also, go on different investment websites, which I highly recommend, whether that's Bigger Pockets, Connected Investors, for women-only investor, the Invest Her, Her, and that's on Facebook. So there are so many different avenues to learn more, but definitely use me as a resource. If you have any loan scenarios that you want to go over, I have a one-page form that I can send you, and that will allow me the ability to easily assess your deal and have all the information right in front of me in order to price it out for you. So thanks so much for your time. I really appreciate it. And I look forward to working with all of you. I will be emailing you personally in the next few days. Thank you for your patience in advance with that, because it is end of month, hand in hand. And so thank you. I really appreciate it. And thank you so much for saying it was great information. I'm really happy I could help and shed a little light on hard money lending. So many people are afraid to use a hard money lender. I did a presentation in person at my local Real Estate Investors Association, which you all have one near you. In New York, I know there's several, because I used to go to the local REIA, REIA in Long Island, and when I lived in Connecticut, and that was always nice because there was over 100 people. Here in Raleigh, we always have over 100 people at these meetings, so they're really informative. They always have guest speakers. It's a really low fee, and you can just learn so much. But I was speaking at one of the events, and I was focusing specifically on rehab lists and red flags, what I look for, what you can look for, and what could help you. So certainly would love to provide you some more information, because I don't just take applications and just put them in. I am a consultant. I want to make sure that you have your best chances and put your best foot forward to get the loan approved. So I look for things at the inception of the loan, and that even comes with pricing. So if you say you're putting $100,000 into the property and you're purchasing it for 200, but the after repair value will be 600, that raises red flags. Like, why would it double in value? An appraiser generally isn't going to give you double the value if you put 100 into it. So I would ask you, are you putting any square footage into it? Is the square footage more than 20% of the current footprint? Like things like that. I want to know all of these details. Is it a shell? That's really important to note. Is the property a shell? Because a shell of a property is not going to appraise as high as a property that's a dated granny house, we'll say, with avocado appliances and shag carpet. That granny house is a usable house with a functioning kitchen and bathroom. The shell house is not. It is just like sticks and everything has been ripped out. And it's much harder for an appraiser to comp out a shell of a house than it is to comp out a very dated house. So that's important to know. What is the way to send a scenario to you? You can either call me and I will send you that one-page form, or you can email me and ask me for the loan request form and I'll send it to you. It's really not daunting. You're just putting in the address and your numbers and I'll go ahead and price it out. It's going to ask for your level of experience, which is exactly what we talked about. How many fix and flips you've done in the last 3 years, how many rental properties you've owned in the last 3 years, and are you a licensed salesperson as far as a real estate salesperson broker, which they call in some states, or are you a licensed general contractor? So that's basically, if you have no experience, just put none. If you have 1 in the last 3 years, just put 1. If you have 3+, you can just put 3+ or whatnot. But it's really easy. I mean, it will take you like 2 minutes to fill out. So thanks again. Oh, is it Xavier? That's my son's name. I love that name. So thank you so much. Oh, here's one from Paul McHugh. Okay. If you buy a house and do no work, how quickly can you refinance the updated appraised value? Okay. We are going to look for 6 months seasoning there because no work was done to the property. If you do renovations and we're going to do a cash out refinance within that 6-month window that most lenders make you wait the 6 months, we're going to ask for a copy of your rehab list and maybe some before and after pics, like very basic, just to notate what has been done to the property and that it has been rehabbed. Let's say you had a situation where your borrower client bought with cash below market and the market went within a year, but the lender we were working with didn't like that and he wanted to pull out more cash than he put in without doing any work. Yeah, we would make the borrower wait 6 months seasoning, because I've had people acquire properties for under $50,000 and they really are worth over 150, but they got it at a sheriff's sale or they bought it for a tax sale, like they purchased the tax lien and paid it off, that sort of thing, and worked with the IRS to negotiate those taxes down. And like I said, the property is worth way more, but we do have to wait the 6 month seasoning. Please send the form. I think I will send the form to everybody once I get to you and send out your specific email. Thanking you for coming to the webinar, Stephen Jenkins. Okie doke. All right, guys. Well, I think I'm going to end this because I don't see any more questions. And I know you probably have another session that you want to get to, but thanks again for your time. I look forward to working with you. And if you have any loan scenarios or questions, send them my way. Once again, 860-432-4894. And my email is emazza@rcncapital.com. And thank you so much for watching. We really appreciate it. And like I said, we want to earn your business, and thank you so much for this opportunity. Bye now.